We're wrapping up an incredibly volatile week for the Forex market, but how are markets likely to respond to what we've seen this week for next week for that week ending June 21st? So I'm going to have all the details in today's video, including the latest on the DXY, the EURUSD, the Pound USD, the Euro versus the Canadian dollar, and also gold. Now, if you guys do want my help with your trading, this is a limited time offer and this is expiring soon. But if you want my help with your trading, including lifetime access to our trading group and also the course that I just launched, the trading group has daily videos, exclusive charts and setups from me. I'm also in there every day helping members. Plus, you're going to see my trades in real time. If you want access to all of that, lifetime access to all of that, click on the link at the top of this video, and that's going to give you 90% off lifetime access to the trading group and also the course. All right, so again, it is a limited time offer and it is ending soon. Alternatively, see the link in the description of this video, or if you're on the website, click on that join VIP link. All right, so let's go and start out this weekly forecast with the DXY as we always do. And what you can see here, I've marked this out because this is what I've shown on the website today, because I want to make this really clear what happened recently. So we've seen the DXY throughout 2024 move within this ascending channel. Now, recently, last week we saw the market break down, spend some time down here in this area, and then reclaim this level. Now, that reclaim was critical, and this is something that I pointed out in recent videos. And the reason that was critical is because it flipped this area down here to new support. Now, obviously on Wednesday, this right here, this move, the majority of this move actually came before FOMC. This was on those US CPI numbers. And what I said in that video is that everything before FOMC, you had to take with a grain of salt. In other words, don't fully trust the move before FOMC. And this is why, because you can see that the DXY once again closed right there around 104.7. So this was the area that I mentioned in that video that you had to be careful of, because if the market closed back above it, and not, right at this exact level, but this is an area, if the market closed up here in this area, then it would still be intact as support. And that's exactly what we've seen here over the past 2 days. So this entire time I have maintained a cautiously bullish dollar approach, and that's because of this reclaim right here. Even this candle, I was a little bit concerned. I'm going to be honest with you. I was a little bit, thinking, where is this going when the DXY was trading down here? However, at the same time, I knew that we had FOMC coming up, and I also knew that what we saw intraday didn't matter nearly as much as where the DXY was going to close this day. So let's talk about what we're seeing here today with the DXY testing this 105.6 resistance. So just like back here, where the day closes today, because this is also a weekly close, this is going to matter in terms of what we see from the DXY next week. Now, I would be a little bit surprised if we do see the market close above this area and just continue higher next week, only because if you look here at the last two candles, if we get the Monday open up here, let's say, or up here, then, we're likely to see a pullback down here into this candle. And you can also see here on Thursday, this was a relatively large candle that we saw no retrace of. So what I kind of think we could see from the DXY is maybe we see a little bit higher on, Monday or Tuesday, but then there is that chance we get the pullback down here into this candle and potentially even Thursdays. But ultimately, like I've said recently, guys, as long as the DXY is holding within this channel following the reclaim that we saw right back here, then I am going to maintain my bullish bias on the dollar. And furthermore, if you look longer term, if you are a swing trader on the higher time frames like myself, then I really think this is something to pay attention to, because you have the reclaim of this smaller channel right here. So the market reclaimed this area down here. We also have it moving within this smaller channel, and coming off of those lows. And furthermore, you can also see where we had this larger channel going back to 2023, where the DXY, ever since the start of 2023, has been moving within this much larger channel. So the fact that it's coming off of support down here, and we also now have this reclaim of that smaller channel, there is that chance that over the coming weeks and months, we get that move higher up toward 109 to 110. So this is what I'm maintaining as long as the DXY is above the bottom of this smaller channel, which currently, if we look here next week, should come in around like 104.9, maybe 105 in this general area. Now, I'm not saying that we will get a retest down there. I don't know what's going to happen, but that is going to be the must-hold support for dollar bulls. And it's going to take a sustained break above this area here that we're seeing tested today. It's going to take a sustained break above this to flip this area back to support and expose levels like 106.50. All right, so next up we have the EURUSD, which is coming off of that 2021 trend line that we have talked about, including last week. I mentioned this level a lot here for the euro, and it's now approaching this trend line down here from November of 2022. So this consolidation pattern that we've seen develop really since the start of 2023 is ongoing. And this market right now, the euro, is working its way into the apex of this pattern. And this is kind of why I've said over the past few weeks that I do think that in the coming months, we are likely to see some explosive moves from the Forex market. Now, this up here was a fake out or a failed breakout. So we talked about this a lot as it was unfolding, and this close confirmed that this up here was in fact a fake out. Now, what's interesting here on Wednesday is that this massive candle, this massive move up here before FOMC came within 8 pips of testing 1.086. And if you guys have followed me for a while now, you know that following this close back below, this up here was critical resistance for the euro. Now, you would have had to be incredibly brave to be shorting this market up here following this move, right, with FOMC coming up. But the point is that the market was still holding below that resistance during those events, during and after those events. Now, with the EURUSD approaching this area down here, let's talk about this trend line here from November 2022, because this is going to matter potentially early next week, because this does come in right around 1.065. Okay, so that is going to potentially create some significant demand for the euro. However, you've got to be careful buying this down here because, like we just looked at with the DXY, the reclaim that we've seen recently on the DXY does indicate a higher dollar. Okay, so a bounce from down here could be temporary for the euro. Now, we also have the market trading below this area back here, right around 1.0725. Okay, so if we get the market closing below this, which it looks like we might, then this level becomes resistance for next week. Now, keep in mind, though, that we do have an imbalance from Thursday. And by imbalance, what I'm referring to here is this red candle that has seen no retrace. Okay, so Friday moved, directly lower. And so if we see the close below this level up here today, then what we could see next week is maybe a retest down here in this area, some consolidation through here, but we could also see an intraday spike above today's high and into this Thursday imbalance. Okay, so keep that in mind as well, that we could see a move up here into this Thursday candle before we see lower. So that's going to be really important, because you don't want to be shorting down here in this area, because you'd be shorting right into support, and you'd also be shorting low after this extended move lower. So as I'm always telling VIP members in the videos there, you don't want to short low, you want to short high and long low, right? It's the same as buying low, selling high. It's the same, rules here in trading. Now, if over the coming week or two we see this area down here give out, then that could be a significant breakdown for the euro towards some of these recent lows. Just keep in mind, though, too, that could also be a fake out. We have seen 2 fake outs above that 2021 trend line up here. So there is also a chance that if we see a breakdown here, that could be a fake out. However, the market would have to reclaim the level just like it did back here twice. Okay, so next up we have the pound, very similar to the EURUSD. It is coming off of that 2021 trend line. And before we get into this too much, I do want to talk about the calendar for next week. I probably should have talked about this at the beginning of this video, but next week we do have some significant event risk, not quite as significant as this week though. So next week shouldn't be as volatile as this week. I say shouldn't be because with these markets, you never know with any market. But we do have some event risk here with the Australian dollar. So we have an RBA rate statement on Tuesday. Monday is pretty light, across the board. And then on Wednesday, we do have some pound CPI. Okay, so CPI out of the UK. And then on Thursday, things really start to heat up because we do have a rate decision out of the UK. So that's going to be significant for the pound if you are trading that, which that includes myself because I am still in a short there. But it's also not until Thursday, so we do have a few days before that event risk. And then on Friday, we do have a lot of PMI across the board for the euro, the pound, and the US dollar. So this is going to be a big one here on Friday. But again, for the most part, guys, it's not going to be quite as volatile, or at least it shouldn't be quite as volatile as what we've seen so far this week. Okay, so jumping back to the pound, we have the market coming off of that 2021 trend line here on the weekly. And if we go toward the daily, this is what I've talked about recently. Okay, so you can see where the market did come off of this resistance area up here. And I was getting short through this area, as mentioned to VIP members. My stop loss was up here in this area. So I stayed in through this move up here. And even though that may seem like a large stop loss, keep in mind that my target is down here. So this is over a 4R, meaning that if this plays out, my reward is going to be over 4 times my risk. So even though this is a relatively large stop, I am a swing trader on the higher time frame. So a move down here would still be over 4R, which is incredible. So with the pound, guys, we have the market breaking down from this trend line right here. Okay, so if we go to something like the 4-hour, you're going to see that this right here is a rising wedge. Okay, so you have this level up here, okay, off of all of these highs, right? So this is what we saw actually tested right there on that US CPI. Actually, this big move right here was the CPI numbers, not FOMC. This was FOMC. So we have this level up here. We also have the bottom level down here, which is breaking down today. So this could be significant for the pound next week. Now, keep in mind that on Thursday, okay, we do have a rate decision out of the UK, so that's going to be significant for this market. And then, of course, on Friday, we also have PMI out of the UK and also the US. So there will be some significant event risk, especially later in the week, next week. So keep that in mind when you are looking at this market. But for the most part, guys, we have the pound coming off of resistance up here. Okay, so holding below that. We also have it moving within this range that we've talked about here with those two trend lines. Okay, so this has been, essentially a range here for the pound. And this is what I talked about too with the euro, where we have the market moving into the apex of this pattern later this year. So this is why, again, I think that over the coming months, we are likely to see some incredibly explosive moves from the Forex market, although we aren't quite there yet. So like I've said recently, I do think that until we get those breakouts, that you want to trade these markets like a range-bound market that they are. And that's exactly what I'm doing here with the pound. So for GBP, what's going to be critical today is this level right here, right around 1.2685. So you can see that going back here, we've got these highs, these lows, highs through here, and then all of these recent lows. So if the market closes, above here, at or above this level, then this is going to be support next week. And you've got resistance coming in up here at this level. Now it could be, here, it could be all the way up here. We'll just have to wait and see what we get next week. But the key here is that, in my opinion, you don't want to be shorting through this area because it could serve as support early next week to where we get that move up, fill in some of this imbalance here, and then we get that rotation lower. All right, but ultimately, I do like the pound lower as long as it's trading below this area up here. This is the one that is going to be critical. As long as we're below this on the higher time frames, I do like the pound lower. But again, you don't want to be shorting into these recent lows. If anything, you're waiting for a sustained breakdown here to really flip this level to resistance and expose levels like 1.256. So next up, I want to talk about the EURCAD, which I think is a really interesting pair. It's not the most popular pair out there, but I think that the price action here is very interesting. So this is something that in the VIP group that we've been, tracking, stalking really ever since back here in May. And what we've been looking for is the potential for this move up here to be a fake out of this key level right through here. And the reason for this is because this was resistance for this pair for several months. And you can see that we had, support develop through here after that breakout. And so far over the past 2 days, we have gotten the confirmed break lower. So this presents, potentially the opportunity to play a failed breakout above this level. And this is exactly what the course teaches. And these are also some of the highest probability plays out there in the Forex market. So the idea here is that this level at 1.4765 or so is going to flip to resistance next week. Now, as for support, it's pretty easy to see that this area down here is going to be support based on these lows. And then we've also got this area down here right around 1.449 or so. And you can also see that this has been a pivot for this pair for quite some time. Now, the one thing that you do have to be careful of, a couple of things. First of all, just like I mentioned with the EURUSD, this candle here on Thursday, we have seen a very shallow retracement of the body of this candle. Now, you can see where today found resistance right there at this key level, which I've had on my chart, by the way, for probably 2 or 3 months at this point. But we have not seen a retrace up here into that Thursday candle. Now, it doesn't mean that we will, but I do think that there's a pretty good chance that even if we see a little bit lower here from this market, that sometime over the next week or two, that we get a retest of this level and probably a move up here into this imbalance up here from Thursday before we see the market sell off. All right, so keep that in mind when you are looking to, potentially get into this or even setting your stop loss. Now, the second thing that you've got to be careful of is if you look down here off of this low, okay, there is a trend line off of some of these recent lows that could be serving as support here. Now, you could even draw this a little bit higher off of the closing price from down here. So something like this, in which case the market right now is sitting right there on support. So this is another reason why I'm thinking that we could see a move up here into this area before we see lower, okay? So there are a couple ways to play this. You either, and this is not financial advice, as always, guys, this is my opinion, but if we get the move up here, you could be looking for shorts, okay, to play this fake out that we've seen confirmed this week. So you could be looking to, potentially maybe get in with a starter position up here. The alternative to this would be to wait for this trend line down here to break down. Okay, so if we see something like this and it break down, then that right there is your cue to potentially either add or get in. Again, not financial advice, guys, just my opinion. So you have to trade this based on your style, what you're comfortable with. Now, if we were to see the EURCAD close back up here in this area, then that, of course, would negate this idea that this up here is a fake out. All right, so just some thoughts here on this market to pay attention to over the coming weeks. But again, given this range that we have seen here from this market, I think this gives us a really clear kind of outline here for the EURCAD if we do get the setup. So I want to wrap up with gold, XAUUSD. This should be pretty quick because, to be honest with you, the market has been very sideways. I did want to include it though because I know a lot of you are interested in gold. I don't personally trade it, at least very often at all, just because I don't always like the way it moves. It's also very volatile. So I mentioned this last week, but the idea here is that you can see where we had this ascending channel off of these highs and these lows back here. We got the breakout, right? Support through here, support once again, and then we got the breakdown. So I think what's going to be critical from here is whether or not we see gold close back up here, okay, so back up here in this area, or if this continues to serve as resistance and we get something like this next week, right? So this right now is still resistance, even though we're seeing the market pressure it. Now, if it were to close today, up here in this area convincingly, then of course that could change things. But as of right now, this level is going to be resistance here for gold. Now, with that said, do you want to short this market? And this is what I talked about last week. Do you want to short a market that has been doing this, right? And also a market that is now pressuring resistance once again. And this is kind of why I don't trade gold and why I, especially haven't traded it recently, just because it has been very sideways. Okay, so I think you got to be careful with this, especially as the market holds above these lows down here. But I did want to, provide an update because, again, I know a lot of people trade this, and also the fact that the market is still holding below this level that I mentioned last week. Okay, so you saw it retested right here, got a little bit of a sell-off, but now gold is right back to testing it. All right, so resistance for next week, right around 2330 to 2340 or so. And then we've got support down here at these recent lows right around 2280. Be sure to subscribe to the channel for daily videos and also get your 90% off lifetime access to the trading group and the course. See the link in the description of this video, or if you're on the website, click on that Join VIP link. Have a great weekend, and I will talk to you again next week.